I wanted to touch on the Chinese economy. And the reason why I want to touch on that on this show is the China economy is the second largest economy in the world. And many believe that at some point, China will pass the United States as being the number one or the largest economy at some point. I think if it were to happen, it would probably take quite a while. Some people think it's going to happen in the next 5 to 10 years, but I'm not a believer in that idea. The China economy has struggled quite a bit. And I think you can trace their struggles all the way back to the pandemic. Coming out of the pandemic, when the rest of the world was starting to move forward again and reopen, China had a no or a zero COVID policy, which meant if there was even the slightest bit of COVID detected in the country, things would shut down again. So they remain closed for business for a lot longer than most other countries. And they really have never rebounded since. We've seen GDP or growth numbers over the last 6 months come in, not bad, but nowhere near what was predicted or expected. They have not recovered to where they were back in 2019 prior to the pandemic. And so China continues to struggle. Now, not only are they struggling with respect to exports, they're not importing as much, they're also struggling with respect to real estate. Some of their biggest real estate developers in China are struggling under the weight of higher debt. We've actually seen Evergrande, which is a company that is a property development company all over the world. They've actually declared bankruptcy most recently in the United States, and they're undergoing a restructuring plan in other areas of the globe. So China overall, they've always had, or they've always, their people have always been big investors into real estate, to their own real estate. And we're seeing that a lot of the properties, the developers are starting to struggle and not make their debt payments, not make their interest payments. And so a big worry for China and a big reason why many investors today have pulled their money out of China, out of real estate. I also think another big reason why China continues to struggle, and one that's really not spoken about, is the pressure that companies in other countries are putting on China. For example, the United States and the rhetoric, the back and forth between China and the US now stopping or not allowing certain exports to China in the tech sector. Certain chips are no longer able to be sent from US companies to technology companies in China. So there have been restrictions placed on US companies with respect to their dealings in China. The back and forth continues between China and the US, and so that is causing a number of companies to be scared. What if, because the US has restrictive measures on some of their exports to China, what if China retaliates and says, okay, these US companies can't do business in their country now? So what if there's some tit for tat, some retaliation? So a number of companies, in my opinion, have started to consider this. Perhaps considered moving some business, some production out of China. I know Apple is now a lot bigger in India than it was ever before, moving business from China to India. I know countries like Malaysia and Thailand have definitely gained a lot of business from other companies that are trying to expand, not only just produce out of China, which right now is not doing so well, and with a lot of the restrictive measures being placed on them by countries like the United States, they want to, hedge their bet a little bit. They want to maybe open up some plants in other countries in Asia. So this has been happening. It just didn't happen, last week. This has been happening for quite some time, and I think it's finally taking its toll on China, and we're seeing it with their numbers. We have a chart here on the Shanghai, which is their index, and you can see basically since the year started, their index has not done a whole lot. It hasn't really made anything, and they continue to struggle with growth, production. They actually are cutting interest rates when many parts of the world are actually raising interest rates. They're cutting interest rates in China to stimulate. They just reduced their one-year bond, which a lot of people's lines of credit and household borrowing is dependent on, although they didn't touch the 5-year bond, which a lot of mortgages are dependent on. So maybe down the road, we may see a cut in 5-year bond rates. But for now, China continues to struggle. And as I said, I think they continue to struggle because of a bunch of reasons. And overall, yes, this will affect global growth. It'll affect world growth. And when you have the second largest economy struggling, you can expect things to slow down. And, we've talked about on other shows how the price of oil is definitely affected by what's going on in China. So let's keep an eye on what's going on there. Whenever they report some economic data, let's see how it looks. Are things getting better? Are they still continuing to get worse? Or have they kind of settled in? So let's keep an eye on what's going on. And moving forward, I think there will continue to be an important part of world growth. And as I said off the top, I think it'll be a long time before they catch up to the United States, but definitely an important part for the global economy.